6 companies today, and the theme is restructuring. Some pulling it off beautifully, others still in the trenches. Let's get into it.
First up, Air Taiki, ticker 9972. They just swung from a 2.6 billion yen loss to a 300 million yen profit. That's a real turnaround.
The catalyst was exiting China. They sold 2 subsidiaries and killed the recycled flake business entirely. The preform segment went from a 338 million yen loss to 290 million profit almost overnight.
But the trading business is dragging, right? Profit halved there.
Yeah, down 53%. Fewer big machinery deliveries. Still, they repaid nearly $1 billion in long-term debt, and the board is shrinking from 11 to 9. Consolidation mode.
Takuma, ticker 4026, is a different story entirely. Operating profit up 50%, dividend raised to 49 yen. What's driving this?
Price revisions and a shift to high value-added products. Eave ceilings, siding, magnesium supplements. But the real headline is Zesta, their exhaust CO2 recycling product, launching October 2026. 3 billion yen capex, 60% already spent.
They even accelerated the timeline by a month, and SBT certification in July. They're serious about the green pivot.
They also flagged Middle East geopolitical risk hitting naphtha costs. Smart to call that out early.
Liquid, ticker 5246. They pivoted hard toward AI, and it's paying off. Sales up 66%, back to profitability.
They reallocated overseas offering proceeds, boosted the Liquid Series AI application budget to 1.29 billion, and cut Elements Cloud down to 400 million. They also liquidated Admedica and deconsolidated their Shikoku Cloud subsidiary. Group went from 5 subs to 3.
Aggressive stock options too. 90 employees tied to 5.1 to 5.3 billion yen revenue targets. Management's not being shy about ambitions.
Fisco, ticker 6634, is the messiest story today. Massive restructuring, but the numbers are ugly. Net loss of 1.4 billion, equity ratio at 3%.
They did a 1.2 billion yen debt-to-equity swap with their parent, diluting shareholders about 30%. Capital reduced by 98%. They also settled another loan by handing over Fisco shares as Daishin in payment.
The crypto exchange Zaif swung to a 494 million yen operating loss. They delisted 3 assets to cut costs, but
The reports actually have conflicting data on crypto asset balances. One section shows a 51 billion drop. Another shows near doubling to 119 billion. That's a red flag on disclosure quality.
Phil, ticker 3267, swing to an operating loss of 121 million. Their flagship Phil Park Sky Shop orders collapsed from 10 to 4.
Interest rates are killing demand. Customers are cautious. But here's the interesting part. They're pivoting hard into development. Property under development jumped 75%, and their future sales pipeline hit a record 12.8 billion.
So short-term pain, long-term bet. Japan Post Capital showing up as a new 3.3% shareholder is worth noting too.
Finally, ticker 138A, net income up 55%, and they've completed their store closure plan.
Capital reduced 97.6% to enable future dividends, and they launched a new shareholder benefit program. Board shrunk from 6 to 3. Security deposits surged to 52 million, though. They're locking down real estate for future expansion, despite net closing stores now.
Classic restructure then grow playbook. Interim profit already exceeded last full year. Watch whether the expansion deposits convert to actual new stores.
The pattern today is clear. Companies that cut early and decisively are reaping the benefits. Those still restructuring, like Fisco, have a much harder road.
Agreed. Watch Fisco's crypto disclosure inconsistencies and Phil's pipeline conversion. That's it for today.